Traders, another great opportunity. This time we bought the market up. We saw that other market participants was buying at the 215 and the 216 level, and we rolled it all the way up. Check out this video and see how we did it. All right. Good morning, everyone. Hope all is well. All right. So we are starting to see prices in IWM drop a little bit. So I like the opportunity or the idea to buy IWM here. Hold on, give me some seconds to move some things out of the way. All right. So I like the idea of buying IWM. There is a big volume area that happened at cash close of yesterday. And that is right at the 216.16 area. And we're kind of starting to play that now. Which is also a big area of volume that other participants bought up in the D period of last session. Between 216.48 and 216.16. There was another area of 216.08 to 215.88. So there's a possibility we may hit that second volume area as well. And it looks like it's starting to fade down. The low of M period right at before cash close at 216.16. So just following what other participants have done, they bought in that area numerous one time, two looks like the second time right at cash close. And we're seeing it's starting to play out right now as they are building a wall between 216.28. We're really 216.36 to 216.24-ish. I'm starting to see a big wall of volume being built there. So I do have 227 calls and 226 calls with I'm sorry, 217 calls, my apologies, and 216 calls with 217 in my active trader. So 217 in my active trader with 217 and 216 calls in my watch list. Price is a little heavy, but that's going to change your cash open. Right now, $99 per contract for the 217s, which is going to change. And then $152 per contract for the 216 calls, which is going to change. The opportunity looked good. We're right at the volume edge as well, so that's another indicator of buying. What I always like to see is I want to see a reaction, right? We're kind of seeing that now, kind of like what we saw yesterday, where there was a reaction happening and it's happening now, before cash open. I would love to see it happening during cash to be able to get into it. Otherwise, it's going to be a fast mover. And we're kind of seeing that happen right now with a big pop of buying that's happening at this moment. We got what, 50 seconds until cash open. I would love us to drop further down into the 216s, but this could potentially be another one of those yesterdays where it just dropped, which is very hard to catch. But I'm gonna stay patient and see if we can find some kind of reaction down. Again, that wall 216.36 roughly to 216.24, and they're buying up now with 20 seconds left. I'm really hoping that this is not a straight off the open rally up. Again, those things are very hard, whether it's rally up or down, are very hard to catch. All right, we are opening in 5 seconds. 217 calls is what my watch list. We're opening now. All right. Prices dropped to $72. The spread is kind of wide though. Spread is $7 wide. Okay, now the price changed. Okay. $66 per contract. which is really good. 217 calls. All right, it hits that daily low with no volume. Okay, this is kind of what I like to see. It's that reaction. All right, I'm gonna enter here. I got $67 per contract. Phil, we seeing some evidence of buying. I think them come in pretty strong. Come on, buyers. They're dropping with no interest. They're still dropping with no interest. We need the buyers to come on in now. They're dropping with no interest. 67 was my entry. I'm about 10 cent in drawdown. Maybe early on the entry for sure. Not maybe, but early. There we go. Come on, buyers. All right, that they popping now. Back to break even. Early on the entry, so not the best execution, but there you go. Little to no interest as they dropped. Come on, buyers, step on in there now. They're there. They hit that second one that we were talking about, that 216.09. Okay, there we go. There the buyers go. Had me a little worried there for a second. There we go, buyers. All right. All right, just hit my first target, moving my stop. About to hit that second one. God, that was a big buy area there. There we go, buyers. 87, almost at 87. I'm gonna move my stop to capture more profit though. So my execution wasn't the best. I took a $10 drawdown, but still in the game. And now buyers are really buying up now. It's very hard to catch very tops and bottoms, but that's why I give myself a $20 buffer because I always see that $20 is enough for it to work out. I just hit my second target. I am out of the game. Oh, they're really coming in strong. If you want to let a runner run, let it run. Let me make sure I have no working orders. I should be good. Yep, all good. They are really in the game now. They came in strong. They hit that second volume area and blew past the first one. But that $20 buffer is why I use $20 or 20 cent if you looking at options terms. Filled at 70, out at 80. Okay. Let me know how you guys did quarter. I know the execution wasn't 100, which is rare. That's why that $20 is definitely a good buffer. Full target, awesome. Yeah, the buyers came in strong. Again, what I like to see, which we didn't see last session yesterday, was that there was no absorption, right? So in this case, it was absorbing sellers. I want to see that reaction happen first. 69 to 80, awesome. You letting the trail run, awesome. Yeah, it's paying. It's hitting that first sign of resistance, 217.08 right now. So I would at least move your stop up to capture more profit. 68 to 84, awesome. Let me move y'all over so I can see. I'm looking at my laptop screen, which is kind of small. Okay, 65 to 77. Awesome. Move my stop too tight. Yeah, I do that sometimes too, especially when I get that first sign of resistance. I move it tighter just to lock in more profit. And that thing is at $1.64. I got in at 67 cents. So that was almost $1 profit. 72 to 104 d demo. Okay. We're gonna turn you from demo to live once you get more confidence. 60 to 104. Wow. Good stuff. 68 to 84. That's cash all day. 75 contracts. That's big money. $1,500. Congratulations. Somebody got some confidence. 75. I mean, I do more, but 75 is a big number. That's a big number. That's nothing to sleep on. 68 to 84. Nice. The buyers are still there. They're just hitting that first sign of resistance. So if you ain't take profit, personally, I'm not a runner. I don't let things run. But if I was, I would probably take everything now. Full target day. I can't see what the number is, but I see green. My screen's a little small. Eight contracts, full 66 to 84. Nice. No voice. Can anyone else hear me? Well, obviously y'all heard me because y'all got in. 67 to 81 and 85, big time. Excuse me, 68 to 78 and 88. Nice. Yeah, the buyers were there. We saw it in market profile. The last time they bought in that area was yesterday, following, I believe it was January 13th profile, where the buyers were in at that price point. Nice call. Thank you. Yeah, it's all market profile. It's not me. I just know how to read it and follow the leader. But I thank you guys for the kind words. And they're selling off now. So hopefully y'all took profits because they're selling right at that sign of resistance, 217.08. 65 to 95, $175 just buying IWM stocks. Okay, good, nice. You are very welcome. Thank you for having the confidence in me. I've been doing this for a long time, and it took a lot of trial and error and a lot of luck, really, because I met the right people in my journey. So thank you for those kind words and the confidence in me. Good trade, left a lot profit. Yeah, you're gonna leave profit on the table. That's just part of being consistent. And you have a goal. Me personally, I have a goal, and I stick to that goal. As long as I hit my goal, then there's going to be opportunity to the next day. So I don't sweat leaving money on the table. You're going to do it if you're seeking consistency anyway. It takes time. Yeah, I know everybody can't read it, but it does take time. It took me some time. I would say it took me 3 to 4 months to back test it to get an understanding, and then it took another 3 or 4 months for me to look at it live because it's a different ball game. Back testing versus live. It's like if I compare everything to sports, so it's like regular season versus playoffs. My first trade got 50%. Okay. Awesome. Great trade. Thanks. Yep, no problem. Thank you. Yeah, I'm not sure. Looks like everyone has heard me. I'm not sure what's happening. A bad trader. You're very welcome. 65 to 80. Awesome. Consistency is the long game. For the long game. Yep, that's true. Uh, 75% out at so 67 in, 75% out at 82. Ooh, nice. 25% out at 95. Wow. 2,500. Is that real money? If that's real money, that's fire. Well, even if it's paper, I mean, you're building the confidence. Uh, how meek and mumble? Oh, okay. Humble, sorry. Yeah, I try to take emotion out of it, which is not the easiest thing to do, especially when you're using your hard-earned money. But as soon as I walk into my office, all of that stuff goes away. It's just trusting in what I've learned consistently, good or bad. Uh, are you using a cell phone? That's a good question. Real money, awesome. Congratulations. I know we missed out on yesterday. That was hard to catch. And I don't dwell on it too much when I don't trade, but that would have been a great one to catch yesterday. I just wasn't confident in it, and I didn't want anybody to jump into something that was hard. Six in 69 out of 94. Awesome. Congratulations, everyone. Awesome, awesome. Yep, yep, yep. I stay calm while talking to you. Yeah, I try. Again, I try to just take emotion out of it as much as I can. I'm human. I don't get nervous with trading anymore. That's gone. That emotion has gone away a long time ago. But there's still emotion there, whether I try to hide it or not. More excitement than nervousness, um, but that just comes with building confidence. It takes a minute to build it. Once you build it, confidence in what you're saying and understanding how to read market profile, the nervousness goes away. And also protecting your account too. So knowing if you do take a loss, you're not gonna blow all your money. You live to fight another day. All right, in 69 to 94, that is awesome. Yeah, you guys got pretty much the same feel I got. I mean, I know it's gonna be hard to get the same feel, even with voice, but just a few dollars off is not bad. Good stuff. Good stuff. I hope this makes up for not not making any trade. I think one of you, someone in the community made a trade off a bounce later in the evening yesterday, 50% of profit, which was awesome. Great read, by the way. I went back and looked at it. How to choose a number of contracts. It's a personal preference. I mean, I would say I can't give you financial advice, but I would say start small. When I add contracts, if I feel confident in it, I do times two. So I do an extra two. Well, not times two, I'm sorry. I do two at a time. So if I started off with 10, I'll get the confidence to do 12. And then that may take me a year before I want to do, 14. It's really a personal preference. Um, make that decision per your account size and your comfortability of taking a loss. Obviously, the more contracts you trade with, the more risk you bring on. So that's part of trading psychology that most people don't talk about. I still struggle with adding more, or what they say in the business, give yourself a raise. Because when you get to a point where it's consistent, you really don't want to rock the boat by adding something new. So I struggle with that. It takes me a while to give myself a raise. No voice. Yeah, I'm not sure. It sounds like everyone else was able to hear me. Yeah, it's always 20. I'm very structured in 20. I've learned with IWM, 20 cent buffer, basically a $20 buffer allows the play to work out. We saw today. I took what was that, close to a $10 drawdown before the buyers really stepped in. That's that comfort or that cushion, I should say. It's very difficult to catch very tops and bottoms, so that cushion helps. And if it blows past or gets to that 20, then it just wasn't meant to be. You you're 100% right. If you are a Giants fan, you have to be patient. Man, we letting people go by sending them to the Eagles so they can shine. So yeah, you got to be patient. You must have saw one of my videos with the Giant shirt on. Yeah, yeah, I am actually recording YouTube as we speak. So this will be once I hand it over to my daughter to do her magic, this will be on there and available to watch probably at I would say 8 Eastern. Yep, yep, yep. Oh, the futures. I've been asked that question so many times. Why not trade futures? Because there's more money into it in it. I just never took a deep dive into it. I actually have a close friend of mine who trades futures. It does very well in it. We trade the exact same way because we learned the exact same from the exact same people or person. I just never took a dive to it. That's all. I just always stuck with equities. Yep, same as IWM futures. Yeah, I get asked that question almost weekly. You would think, I mean, because I have, like I said, a close friend, I can pick his brain, but I just never done it. Yeah, yeah. One day, if I get the opportunity to sit and think about it and really look at it, life is uh, life is pretty busy nowadays. If I get the opportunity to sit and really focus, then I'll do it. So, oh, really? Okay, 25 to 30 ticks. See, I got to get my mind, reset to the tick thing as well. QQQ, no way. I would say when I first started my trading journey, I used to trade diamonds, Qs, spiders, and Russell. I used to look at those four, and I lost more trading the Qs than I did anyone else, any um other play. So I stay away from it. Qs is just not meant to be for me. I learned that a long time ago, and I don't know why. 3 different accounts. Okay, nice. Yeah, I keep hearing that the money is bigger over there on the future side. Trust me, I hear it all the time. A bracket, yeah. So a bracket contains the stop, and for me, it's 2 take profits. You can do 1 take profit. You can customize your bracket to where you can do 3 take profits. It's really up to you. But the purpose of a bracket is to protect you from taking from blowing your account. And also for any unforeseen events like power outages or your computer just clunks on you, you know that even though it's a headache, you won't lose your entire account because you're protected. So every order that I trade with has that protection of a bracket. On my third chart, 5 minute footprint, um, it is volume, correct. Yep. That's all I care about because even if you switch it to bid and ask, the market can hide their orders, but what they can't hide because of regulations is volume. So if they can't hide it, then I'm gonna stick to what they're gonna show me. If it ain't broke, don't fix it. Yeah. I mean, I've been thinking about it. I just don't have the time to switch over to futures. And I want to really take a deep dive into it first. But you're right. If it ain't broke, don't fix it. If you find consistency in something, why switch? The VIX was pretty high at cash open. Let me go back to the chart. Yeah, I mean, it's almost at the 20 mark, right? 19, I think, what time was that? Right at 6 a.m., which is way too early. It was almost at 20. Total volume only. Yep. Yep, exactly. Oh, I believe it. 150 a day on futures. I believe it. I know the money is bigger over there. And you don't have to be in the market for a long time like we don't to make that money. I mean, obviously you're gonna play with a larger size, but I believe that. I know people who make, over 6 figures trading. I'm just not there as far as a day. I gotta get way. I'm not comfortable investing that much money first. First of all, because you can lose it as well. When you say add 216, 217 call 0DT to watch list, what do you mean? There's so in TOS, you're able to set your watch list to link to your active trader. So what I do is I go from the options ladder, pick the order that I want, add it to my watch list, and then by clicking on the option, it'll switch in active trader. So I always have two or three that I'm watching or that I want to maybe order, but my active trader is the one that I'm ready to push the button on. The color doesn't matter as far as bad trader if it's broken down to up volume or negative volume. It doesn't matter. What you're gonna see as far as positive and negative is in the delta. That is the difference between buyers and sellers. Like the color of the candle doesn't matter, honestly. It's volume and who's in control. Time zone, I'm in on the East Coast. No, I can't use the Dom. That moves way too fast for me. That's why I like the footprint because what prints is there forever. So if I miss it, I can always go back to it. The Dom, once it flashes, go away. That's it. I tried that. That's way too fast for me. I've tried what's the other one? I want to say executive orders too, but they move too fast. At least with order flow, footprint, once it prints, that's it. You can go back and look at it. Oh, perfect. Thank you for that. Yeah, I try my best to explain as best as I can. I don't pretend to be a teacher. Um, but I try my best to explain, how I approach the market and what I see. So thank you for that. A bad trader. How I select buy calls and puts, I'm not sure. I explain how I buy calls and puts. As far as like in the money and out the money, is that what you mean, Petty Barry? I think that's what you mean. I look at the delta if that's what you're asking. I look for 30 and above, and the market is starting to drop now. So they took that little profit now, it's dropping. I think that's what you mean. I'm looking for a 30 delta, whether I'm buying calls or puts, because anything below will move your profits or move the ability to make profits very slow. So 30 is always the benchmark. I hope that answers your question. I do show delta on the footprint. Yep. It's for me, it's set up at the top of the candle. It's a delta and the total volume of that candle. But to be honest with you, I don't look at the total volume of the candle. I look at the volume by price point, which is inside the candle. Because volume of time doesn't matter more than volume of price. Price is what moves, not time, basically. Time tells you how long it stays there or not, but volume of price is will tell you where other participants are interested in or not interested in. I don't know about TradingView. I've never used it. I know a couple of our people in our community has used TradingView and was able to set it up with market profile and order flow. I believe y'all were talking about it yesterday, if I'm not mistaken. I was kind of in and out a bit. Commissions, oh yeah, for futures. Yeah, 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 definitely. I mean for us is what 65 in, 65 out, and that grows as your lot size grows. But yeah, I know the commissions are. But commissions are cheap though. 65 in is it's not bad. That's pretty much like a spread. I have not. Honestly, I don't even know what that is. Try options on TNA. What is that? This is different terminology. No, I haven't. I haven't. Only ETFs I've ever touched were spiders, Qs, diamonds, and obviously Russell. I learned from those ETFs, and I've always stuck with it. I've never traded anything else. I never traded. Actually, I take that back. I did trade gold once, and I made a profit on it, and I just never looked back. I never tried it again. But other than that, I've never traded anything else other than those. So what I show on each candle on the 5 minute is volume at price, right? The delta is in there, but I have it on the top of each candle, just as a reference. So you just know who's really in control because the color of a candle does not matter. It doesn't tell you who's really in control. It's a false narrative to think a red means they're sellers in control, or green mean buyers. I hope that answered it. But yeah, it's about price. It's all about price. Time is important, obviously, but to me, prices and volume is more important. Oh wow. Okay. So it's very dangerous. If IWM goes up $1, TNA goes up three, but it follows Russell, right? So what's the spread on it though? Something to look at. Actually, I'm gonna write that down to see. I'm probably not gonna trade it, be honest with you, but I'm interested. What in detail? What told me I was gonna buy? Market profile. I look at market profile. That's the very first thing I look at when I open my chart. I want to see what other market participants have done. It's a honestly, it's a big game of follow the leader. It's it's the receipts between buyers and sellers, the transactions. You want to see where they sold and where they bought. And if I'm looking at market profile, which is a great way of putting in a nice neat package what transpired that day. I want to see where they bought and where they sold. So the profile, which is yesterday's profile, let me move this out of the way so I can see it. Um, Yesterday's profile, we saw that other participants bought in the D period, which is 11 to 11:30. They also bought on the C period, which was 10:30 to 11, and they also bought in the B period, which is 10 to 10:30. So I'm looking for areas of buying because that's where other participants felt like IWM was worth buying. So I'm just gonna follow the leader in that idea, but then I move over to order flow. That's where I want to see it happening in real time. Just because they did it before doesn't mean they're gonna do it again. But the logical thought is, well, they bought here, and this is the first time they've come back to it, and we all know that bigger players, the hedge funds, the institutions, they can't put all their orders in at once. So this could be a second opportunity for them to buy again. That's why we want to look at order flow to see it happening in real time. It sounds simple and it really is simple, but until you wrap your mind around it and actually, make it as easy as possible, get rid of the other stuff that's unnecessary, it's really just a game of following the leader. Hopefully that answered your question. Bruce F. Yeah, yeah, it's definitely good. I mean, if it ain't broke, don't fix it. But there's nothing wrong with exploring either. I would say most likely I probably wouldn't trade anything else, but I'm always open. Right, it's the volume of price. So a bad trader, I'm not looking at the total volume of the actual candle. I'm looking at areas of interest, right? So the areas of interest come from market profile, right? So then when I see like today, B, C, and D period of last session, we there were buyers, right? They decided other participants decided that the 216 price tag or even the 215 price tag, IWM was worth buying here, right? So now that I see that this is what they were interested in, then I go over to the footprint chart and I'm more looking for either a lot of volume or a lack of volume. So in the first 5 minutes of today, price dropped from 216.20-ish all the way down to 215.99. And if you have your order flow chart open, you will see as price dropped further and further down, there was less and less interest of keeping prices that low. And just like adversely, if you were looking to drop the market and the price went higher, there was less and less interest of other participants willing to buy at that high prices. Hopefully that answers your question. So when I want to see that reversal, for lack of a better word, I want to see a lack of interest. Like we were selling, I want to see other participants not willing to buy those high prices and vice versa. Volume is important because they can hide if you're doing bid and ask. It's good information to have, but again, they can hide their orders, right? They can iceberg them basically, piecemeal them. It's hard to determine if that's really going to be, unless you see, a building of wall like we saw at pre-market. It looks like it started at 9:05 all the way up to 9:25 before cash opened. They were building a wall between 216.39 to 216.24 roughly. You can see that happening, which gives you more confluence in the buy along with order flow. Order block, that's misleading too. I mean, it's no really such thing as an order block. Volume profile, I do look at to get a sense of overall volume. I think I had one on one of my screenshots that showed volume profile. I don't keep it on there, but I do flip it on just to get a sense of the overall volume or the lack thereof. Order block is just a formation. Formations are um, huge in the retail world. Technically, we are retail traders because we don't belong to an organization, but that's a retail thing. No problem. I got plenty of time actually. I got another 30 minutes until I gotta start getting ready. So keep the questions coming. I probably won't stay on for the whole 30 minutes, but keep them coming. All right, bad trader. See you typing. Let me move this over. See it better. Okay. Okay. Yeah, we were talking. I think you sent me a screenshot of your footprint on both right and left. It's pretty busy to have it on both sides. I would pick a side, and it's really a preference. I can't tell you which one you would make sense to you, but for me, it's always on the right side of the candle because it's easier to see because there's no other candle on the right side until the time is up. Okay. information overload. Yeah, that the having it on both sides is tough. It's tough. I played around with it too, just to get it to where and I know my my setup can be a little different. It's just how it just works for me, for my brain. The way I have monthly on the left, weekly on in the middle, and then the dailies on the right side. That's just I've tried all different ways, and this is the only way my brain can keep up with the information. And you guys may find a different way for you, but that's just how I have it set up. Because weeklies are important. I mean, weeklies don't happen a lot. Monthlies rarely happen. But when prices do hit those areas, watch out for a movement. So definitely keep those on your screen. It's just not every day price is going to hit them. Price has dropped dramatically. They took that profit and was out of here. Now I did a little bit of looking at trying to share my screen. That messes up my setup. So I'm not gonna do it. But I do record if I can. I don't get to record every day. And I'll post that on YouTube so you can see it. Yep, yep, yep. I do post on my YouTube channel. My daughter runs my YouTube, so once I finish recording, I give her my laptop and she does her magic. A lot of times it'll be available to watch like 5 Eastern. I'm sorry, 8 Eastern around that time. So the VIX is at 20. It is. Oh yeah, it definitely is going higher. The VIX is 2032 at the moment. No, it takes some time. Definitely not gonna take a week. I would say if you really want to learn market profile, there are two books that are awesome. I actually was assigned these books and I had to read them within a month before I was able to trade with the actual money. And they are extremely awesome. I know a few of our people in our community has posted it before. Um, one of them is Mind Over Markets, and the other one is, I believe, TPO Volume Profile. That's not the full name, but I got to get it for you. And they are excellent. I mean, those books really break it down in an easy way to understand. I also have a video on YouTube that breaks it down, but again, I'm not a teacher. If you want to get a deeper dive into it, I would suggest those two, which I'll try to find and post. But it's gonna take time. It's a journey. Yep, volatility was mild. At least at least the first 5 minutes it was. Maybe the first 10, and then it's gone crazy. I mean, we it's price has fallen out of the sky right now. Two 14s. Same. Good stuff there. Thank you. Yep, yep. Thank you. Thank you. Thank you. Thank you. You're very welcome. All right, I think I'm gonna head out of here. Any other? Oh, thank you. Thank you for pointing that out. Yep, those are the two books that Texas Yeti posted yesterday, I believe. Thank you for that, Texas Yeti. It took me a minute trying to find it. You beat me to it, so thank you. Those are awesome. In your charts, you're seeing a big buy at 214.50. I would look at it. I haven't even was that from the 13th? I will have to look at it to see. Because right now it's 215.30, 215.40. So you right on the money with that. Yeah, yeah, yeah. I just haven't looked at it, but yeah. I mean, it bought up from 214.88, then now 215.48. So you on the money with that. I think we had a report at 10, right? Didn't we have something come out at 10? So that could have been a catalyst. Oh, consumer confidence, I think, came out at 10, right? So not only with market profile, but also, let's see, volume pro. I think I'm sorry. Yep, consumer confidence came out at 10. And consumer confidence is actually negative. It's actually very negative, worse than last report. So that could just be buy orders there, but the overall move could be continuing to fall, especially on small cap. Yeah, small cap follows economic news to the T. Small businesses are much more affected by positive or negative economic news than anything else. All right, if there is, yep, check the useful videos channel. I've tried to post all of the ones that I think would be beneficial. But you can always go through my channel as well and just find anything else. The names are what drives traffic, but there's a lot of value in those videos. All right, if that is it, and I'm gonna go ahead and head out of here and pass my laptop over to my daughter before she goes to school. Is there any other questions before I get out of here? All right, cool, cool, cool. Petty Bear, I see you type in. Yes, great day. Great day. We got some important news coming out tomorrow. We got new home sales at 10, but that may not affect us. And then Thursday we have some big ones. GDP, jobless, durable goods, all at 8:30. So that allows the market to digest the information, which is great for us. And then Friday we have international goods and personal income at 8:30. So those 8:30 reports are awesome because it gives us time to digest the information and figure out if that's going to be the catalyst or not. All right, everyone. Y'all have a great rest of your day, and I'll see you all tomorrow morning. Have a good one.